Welcome back to the channel. So the S&P 500, which is essentially the entire US stock market, just hit $5,000 for the first time ever, over $5,000. But we're going to get into all of that. And I'm going to be talking about what that means for you as an investor, what that means for me as an investor, and kind of how I'm going to be approaching the markets kind of moving forward. Because once we reach all-time highs and we continue to push, there's usually some kind of pullbacks or there's some kind of retracements in the market. And, these are things that we need to be wary about. Buying at all-time highs, isn't always like the best strategy, because if you do see a pullback in the market, that means you're going to see a pullback in your money, right? You're going to see a drawdown, you're going to see red in your account. And as new investors, this is not something that we want to see in our account. So we have to be strategic and we have to be intelligent with the way we invest when we reach new all-time highs. And also the Fear and Greed Index, which tracks investor sentiment, that is in extreme greed territory at the moment. It's only just gone into the territory, so there's a bit of way to go until it's like extremely extreme greed, like hitting the end of the barometer. But nonetheless, when we are in these territories, when we are here, it means that there can be some retracements in the market, which is healthy. We want to see those kind of pullbacks in the market for those kind of longer term opportunities. So if the stock market's reaching all-time highs now at $5,000, maybe wait for maybe a 5, 8, maybe 20% pullback, and then you can get in for the stock market to continue going higher. And also, once we reach these kind of highs as well, it means that people are profit taking, right? So if people have been in stocks for, say, for 5 years, for example, and now they've reached their profit target, people are profit taking, traders profit taking, big banks, institutions, they might be profit taking as well. So, these are all factors that we kind of need to think about that when we're investing and when the stock market kind of reaches all-time highs. So as you can see from this graph, we are probably at the euphoric stage right now, which means that people are more than optimistic about the stock market, more than optimistic about their returns. And people usually during this time thinking that the stocks are going to continue to keep going up. They think that, we're going to the moon. They look at the economy, they think the economy is doing extremely well. Now that we've reached all-time highs in the stock market, what I'm going to be doing is monitoring stocks more closely that I'm interested in. I'm not going to jump into the markets head first and start buying at these all-time highs, because if I do see a pullback in the market, if I do see that kind of retracement that I think is going to happen, I'm going to essentially be down on my money. So I'm going to be waiting, looking more closely at companies, having a look at the valuation, seeing where companies are and how they're kind of moving forward. There's some companies that's been on a complete tear recently. So we have the likes of Nvidia, we have Microsoft, which is now the most valuable company in the entire world, taking over from Apple. But I think Apple will come back. So, these are the things I'm going to be kind of looking out for. I'm going to be looking out for different key metrics about the companies and kind of how they're going to be moving forward, how they're going to be returning value back to investors and back to shareholders. And from there, I can kind of make a decision about what I'm going to be doing and how I'm going to be investing. But as usual, I will be dollar cost averaging into the S&P 500 and into the FTSE All World. These are two broad-based ETFs that I hold. One tracks the US stock market and the other tracks the entire world. So the reason I continue to invest in ETFs is because if I do see a pullback, it's not going to be as aggressive as if I was investing in an individual stock. So because there's 500 companies in the S&P 500 and over 1,000 companies in the FTSE All World, if there is a 5%, if there is a 10% pullback, it's not going to be as aggressive if I was to just invest in Microsoft or Apple, for example. So let's dive into some of the companies that I'm going to be investing in 2024 as the year progresses. Obviously, having first looked at the valuations and seeing where these companies are headed. But the first is Apple. I usually tell people that investing is easy because we as investors, we don't do the hard work. The only hard work that we do is researching these companies, but they've made it so easy for us. I usually tell people, buy the best companies in the world and hold forever. Microsoft, Apple, Amazon, Google, these are the best companies in the world. We use their products on a daily basis. So why we as investors aren't going to be investing in these companies? They've made it so easy for us. Everyone probably has an iPhone. I mean, not everybody, Android and whatever, but the vast majority of people love Apple products. So why not invest in Apple, right? Same goes for Microsoft. People love Microsoft services, the computers that they offer, the cloud services. Same with Amazon. People shop on Amazon almost every single day. So why not invest in these companies? Like, investing is super easy. Buy the best companies in the world and then hold them forever, right? And then when you see things change within these companies, if they're not performing, if they're not meeting investor expectations, then you can decide to kind of rotate out of these companies and move into another company. And this is key for ETF investing. It makes it easy. So if you have 500 companies in the S&P 500 and 499 is not performing, that one will drop out and then one will replace it. Investing in ETFs is easy, but I believe Apple continues to dominate the tech industry. I think they're still innovating, and this is something that we want to see for Apple. We want to see them continue to innovate. We want to see them bring out new products, a new product line. We don't want to see them continue to do the same thing, but Apple will always be the company that I hold. So yeah, next is Microsoft. So as more businesses transition to remote work and cloud-based solutions, Microsoft's suite of products, including Azure and Office 365, are in high demand. And with their continued focus on innovation and expansion, Microsoft is well positioned for growth in the coming years. So, like I said, Microsoft took over Apple as the most valuable company in the world. And I'm saying it, investing is easy. Buy the best companies and hold forever. Given you have to wait for a pullback, because buying at all-time highs isn't the best and smartest strategy as an investor. So next we have Amazon. So if you're not invested in Amazon, but you have Amazon app, you're buying from Amazon every single week, every single day, something is wrong, something is missing. So the e-commerce giant has seen exponential growth over the last years. With the increasing trend of online shopping, Amazon's dominance is expected to grow. Additionally, their cloud computing arm, AWS, which is Amazon's web service, remains a key driver for revenue and profitability. And also, we're going to see Amazon kind of transition, kind of move over into the healthcare sector. So this is key and this is interesting. So bear that in mind, kind of moving forward, thinking about Amazon as an investment. So the next one is AMD, which stands for Advanced Micro Devices. And with the rise in demand for high performance computing, AMD's innovative semiconductor solutions has been gaining traction in the market. Their strong product line and partnerships with leading companies make AMD a promising investment choice for 2024. And the reason I'm kind of poised for investing in AMD over Nvidia is because I see so much room for growth and like potential in AMD. Plus, the stock price hasn't grown at an exponential rate like Nvidia has. So yeah, keep an eye on AMD. I think it'll be an interesting one. Next, we have Google. Again, investing is easy. Buy the best companies in the world and and make money from them. Like they've done the work for you. All we have to do is do the research and kind of put our money where our mouth is. But yeah, Google is another tech giant that shouldn't be overlooked. As a leader in online advertising with their diverse portfolio of products and services, including YouTube and Google Cloud, Google continues to generate substantial revenue. And with their focus on artificial intelligence and machine learning, Google is well positioned to capitalize on future technological advancement. So yeah, I definitely have Google on my list. They have a gap fill to the upside as well. So yeah, 2024 we could see a lot of promising things from Google. So yeah, thanks for tapping in, guys. I hope you enjoyed the video. I hope you got something out of it, got some value out of it. Make sure you like the video, subscribe to the channel, share the video with your friends. Drop what companies that you're investing in 2024 and what you're most excited about for the year to come. But yeah, I'll catch you in the next one.